Yo, what's good, traders? Welcome to this new video. I apologize for um giving lots of time to get this episode 3 together, and I'm going to make this, I think, a little bit longer so that I can cover up for the remaining point of interests I thought about in episode 2. Okay, so I'm going to make sure I try to keep up with releasing content on this constantly so that you guys can see how to make use of these concepts in trading. I saw a comment that was saying, how can we apply this to trading? I'm going to actually teach you how to apply it in trading, but just do have to follow up the series on this YouTube channel. Okay, so I've talked about other blocks. So the next I'm going to be talking about is fair value gaps. Okay, FVGs, fair value gaps. Now, this is a kind of POI used by smart money traders. Okay, and when I mean POI, I've explained it in episode 2. You can go back to episode 2 and watch how I explained what it means by point of interest in the market, how SMC traders view it. Okay, and this is a kind of point of interest, and most, or is it most, or let me not use the word most SMC traders rather take trades from other blocks. But FVG, we have fewer traders that take trades from FVG. So what's an FVG? Fair value gap. Now, this is how candles behave most of the time. Okay, the normal way candles behave. When it becomes abnormal, then there's a fair value gap. Now, this middle candle is a candle we are referring to, okay, in this context. And this on top are just like the wicks, okay? Just like the wicks. Okay, so these are the wicks on it, and watch what we are referring to, which is the middle candle. Now, this is the candle we are looking at. If you see, the previous candle before it had a wick and covered this candle up to this level. We're going to use this tool to show you guys. Cover this candle up to this level. Okay, the candle that came after this covered it with its wick. So the wicks are connected. Sometimes we have the wicks long like this, but what we see is that this middle candle is covered, and the next candle will form will also cover this, and the candle after will also cover this. So it's more, that is how these candles form. But there is what we call imbalance or fair value gap, which I'm talking about now. This is when something abnormal happens, and something like this, there is a space. Okay, what I showed you before was the normal way candles arrange themselves up. That's the normal algorithm. So when there is a space where this did not meet with this, or this did not join, or they are not there, there is a gap left, and that's the gap I'm talking about. This is the gap I'm talking about. All right, there's a gap I'm talking about. Okay, now this gap is known as the what? Fair value gap. This gap is known as the fair value gap. That's what it is. When there is a space in between that the previous candle and the candle after fail to cover, it is known as fair value gap. Sometimes this gap is wider in some cases, sometimes it's small, sometimes it's tiny, but it all depends on the space left. So I'm going to go forward to real life charts and show you this is our trade today, GBP USD longs, and price has been choppy, has not been behaving well, and it just took me around break even after hitting my TP1. It is what it is, we move, it's part of the game. All right, so now looking at examples of the charts, I'm going to show you this. Now let's look at how this is forming carefully. So now look at this black candle. The candle before it has wick covering it and has a wick up. The candle after it has a wick up, covers it completely. So this candle is covered by this at the back and this at the front. There's no gap. The next candle here is also covered. This is covering it and this long one is covering it. Now let's look at the long one. This long one on its own, this one after it covered it to an extent, and this one after it covered it to an extent, so leaving a gap right there. This is the gap. There is a gap. Okay, so that gap, as you can see, okay, that gap must be covered by the market sooner or later. So price often moves to cover the gap later, which you see here, before going the opposite direction most of the time. So that is used as an entry criteria in smart money trading. Just like how in price action, they look for candlestick confirmations, candlestick rejections before they get involved in trades. Some smart money traders make use of FVG to time their entries. As you can see, let's say if they were planning to sell right around here, okay, let's say this is liquidity, buy side liquidity, price just grab buy side liquidity, and then give a breakout structure, which you see here. They take their sales from this fair value gap, and you see how price slumps down. I'm going to explain further how to use fair value gap too, but for now, this is just all about showing you how or where they are in the markets. Okay, so now this is FVG again. There's a gap here, and you see price traded back into it, and then price slumps down. Okay, this is another FVG that price traded into this gap. You see I'm drawing the gap from week to week. So I'm drawing it from this previous week to this week. See, price came back into it and slumped. Now this does not happen every time. Sometimes price doesn't come back to certain ones, like the one here, price did not come back. Like, so it's all about going to backtest and see how it plays out most of the time. Like I use it sometimes and sometimes I do not use it, right? So that's exactly how it plays out. Now, how do they use it if I'm trying to use normal SMC structure? Now, let's say if price is trending to the upside, this has some traders use it. Once it's pulling back, they want to enter on an FVG, okay? They want to enter on an FVG around here. Now, for instance, if this is a higher time frame structure, they will not just enter that way. Okay, what you do is you actually wait for price to pull back, go up, create a new break of structure, clear the previous high there. Now trade back into another fair value gap inside, and then move. So another smaller one might be located around here. So that's what it is, and that's how they actually get into trades all the time. So that's the use of fair value gaps in smart money trading. So you go and backtest and see how many times it has played out in real life. Okay, how many times it has played out in real life, and see how much you can use it. Me also, I'll show you where you can use it too. Okay, so that's for now. What I can show you is I'm trying to teach you different point of interests in smart money trading, and this is the fair value gap and how they use it. I just gave you a brief look into it, but let's look at another point of interest first, then before I go ahead and show you some other things. So this is another point of interest I'm going to do here, known as the breaker block. Okay, the breaker block. The breaker block is just, it looks like the break and retest idea in retail price action, whereby price breaks out of a particular zone and retest the zone. And what do? They look to buy or sell. You know what I'm saying? They look to buy or sell. So this is what I mean. Now, explaining retail price action logic. When price is in a particular range or something, when it breaks out, they want to get involved when it comes back to retest so that they can buy it, right? So to them, their resistance is here and price broke resistance. So if price retest resistance, they look forward a continuation and their stops are below. Now, in smart money, there are some traders that still use this logic, but in a different light. And how do they use it? So now in episode 2, we talked about order blocks, and we said order blocks, for example, a bullish order block looks more like this. A bullish order block is a last down candle before an up candle. So this candle is supposed to be red. Since it's the last down candle, supposed to be red, and this one is the up candle. And what price will have to, we are going to like use, you're going to mark out this area because they believe price often comes back to this area to retest this area before going up. So it's more like price trying to do this shit. Oh, sorry. Price try to do stuff like this and then go back up. So that's the idea of this. Now, what are breaker blocks? This is order block idea, but what are breaker blocks? Okay. Okay, this. So what are breaker blocks? Breaker blocks is when a demand is when a demand or an order block fails, breaks it through it, and price comes to retest that same area. So what I mean is this: let's say this failed, but price retests back this area and falls even further. So what does that mean? It means this was supposed to hold but didn't hold, but when price broke through it, it failed. Price came to retest the same region and fell back. This same region that is as measured as this down candle, which is order block. So it is known as what? Breaker blocks. Okay, it is known as breaker blocks, and I'll show you examples on live charts. It's known as breaker blocks. So I'll show you examples on live charts. Let's see. If it goes to him at TP, that will be annoying as fuck. It's ranging like, I don't know. So, looking for a perfect example to show you guys, so you guys can see. Just be patient. We're gonna see an example. This shit happens, but not really all the time. So we see this order block right here, and you see how price respected it for a while and then broke through it, and then you see price retested it, and you see price slumped down. Okay, now another scenario here too. Price did the same thing. Price broke through it, retested it, and then slumped down even further. So some people use it as an entry, but I've never used it before. But I'm not saying it doesn't work. Like I said before, that there are scenarios where it works, but then you don't use it alone. You use it based on what the market is doing. So that's just like an entry criteria. Okay. So we're going to be talking about another one, which is OTE, optimum trade entry. Okay. That's okay. Anyway, OTE. people that make use of OTE as a point of interest, right? Because we are dealing on point of interest at the moment. So now OTE is the act of using Fibonacci to measure how far price can retrace. So it's more like this. So automated entry, it's more like you draw it from the low of the swing to the top of the swing. Okay, so this area, as you can see, this area is where is highlighted as the OTE. We have 0.62 level, 0.705, 0.79. These three are the golden levels we have on the OTE, optimal trade entry. So these levels, when price comes back here, like it's likely to react or try to continue in the supposed direction. So some traders use it and they mark it and then they watch price action around there. So maybe if they see something like this, they see something like this, they try to they might enter from an order block or a fair value gap, or they try to draw another OTE again, trying to measure how far price can retrace. And then what happens? They tend to put their buy at the 0.62 level, the stop loss below, and they aim for the high. Okay, so this is another trading pattern, about, though I've not used it before, but I know people who make use of it. So as you can see, this level is determined by the fib. All right. So now some of you don't have your fib set like this. I'm going to do something and you guys go and set your fib. Right, you can do a screenshot on the settings if you like this. So a screenshot of the settings. Yeah, so that's it. These are the fib levels. So 0.62 level is the first level that price may jump off from, or the second level price can jump off, or this 0.79, this green level. It's marked green because it's the last level price will jump from if it's likely to go in continuation direction. So let's look at live charts and see areas where it's likely to work. Yeah. So I've gone 1 hour time frame. I'll show you something because they use it where you're looking at structure first, and now you see price break structure to the upside like this. You see price break, and what does price do? Price retrace back. What do? You draw your fib from the low to the high, and you see around this level you see price jumped off. So this is more like a point of interest. So they'll come here, maybe I'll look for some confirmations and then get involved with the trade. Okay, now it happens even for the downtrend, not only for the uptrend. So when you see price has changed character, okay, what do? Price has changed trend. So what do? You draw your fib in the opposite direction. So you draw it from new swing high to new swing low, and you see price respecting 0.62 level, dropping from there. So when price makes a new swing here again, what do? You draw your fib again from swing high, swing low, and you see on this time it wasn't respected. You see price trying to throw a wick. Price threw a wick above, but you don't take entry from the 1 hour, right? So you go and refine it, and then you still get involved with the trade as long as you went in that direction. So that's how they make use of it. Even right here, this was a scenario where you would have failed, but that doesn't mean it fails all the time. This is more scenario where it will have worked, I think. Yeah, you see it's very close to the 0.62 level, an area where it would have worked perfectly. Okay, so they make use of it and it works. Okay, it works. Not all the time, but it works. Let's see if it came up to OTE. No, we didn't get there. Alright, so let's see this new swing. Swing high, swing low, see how it respected it, right? Okay, so that's enough for OTE. Now, all these shades, you can build strategies around it, and they can work out for you if you backtest them properly before using them and demo trade it for a while before using them. So that you don't go and just lose money for nothing, right? Go very close. Okay, so that is for OTE today. So now next episode we'll be talking about more elements smart money traders looking to as to take trades or to like how they look at the market. We have talked about the market structure and everything, and the retracement back to demand zones and the rest. We talk about other block, fair value gaps, breakout blocks, OTE, and watch out for the next topic in the next episode. All right, peace out.